So just leading into reporting season, we felt that most of the stocks were fully priced and that a positive outlook commentary was needed to maintain the momentum in the sector. And by and large, the outlook commentary has been positive and share price momentum has been maintained. So on that front, we've maintained ad recommendation on ResMed and Sonic, so happy to keep buying those two stocks. We have hold ratings on CSL and Cochlear. Those four stocks all provided good outlook commentary, which we think will underpin the share price for the next 12 months. We did take the opportunity to downgrade our recommendation on Ansell back to a hold. They were hit by higher raw material inflation and tariffs. Two stocks that didn't show much momentum post the results, and we remain on hold ratings, were Healthscope and Primary Healthcare. With Healthscope, they still have some operational issues, and investors are currently trying to digest the potential of rolling up their properties into a REIT. And this follows a strategic review by management and knocking back of two takeover bids. In terms of Primary Healthcare, that's been another difficult stock. We don't have much exposure in the network, fortunately. They're going through restructure, turnaround, work in progress, whatever you want to call it. They've also announced a $250 million rights issue to fund the acquisition of some day hospitals. So we still find that business quite difficult to get too convicted on. We have Ramsay, the last large healthcare stock to report this Thursday. Consensus numbers are sitting around EPS growth of 7%. Again, it's been well flagged. There are a few operational issues across some of the geographies. We're just cautious also that they might get caught in a bidding war for those Swedish assets that they're bidding for. So just a cautious stance on Ramsay just ahead of that result. Turning to aged care, we've again struggled over the last 12 months with the sector. Some operational headwinds, funding constraints have really been key in the sector. We saw Japara report their results yesterday, down 21%. It had been flagged, but their outlook commentary was quite weak. However, this morning we have noted in the Australian that there's a report that private equity could be circling Regis. So they're going to report on Friday. So that might create a little bit more excitement into an otherwise difficult sector. So just keep your eye on Regis and any potential consolidation activity that might flow into the sector. On the IVF players, we see that sector is largely commoditised. Earning growth is difficult to come by, and we have both players on a hold. Moving to the emerging healthcare space, Nanosonics was one stock that we were hoping for a better entry point into at the full year result, closer to the $3 mark, but the stock barely missed a beat. Despite posting a small profit, and there were consensus downgrades to FY19, the market's looking through all that. There's a new product that's been launched in their high-level disinfection area, and there's additional products to come to market over the next couple of years, and that's really caught the investors' attention. So we do have management in from Nanosonics this Thursday, so encourage everybody to listen into that. It is a very good story, and we will be just keeping a very close eye on our recommendation because we were trying to be cute and it didn't work. Smiles, the dental roll-up story, posted a result. It had been pre-released, so they basically hit their prospectus numbers after adjusting for some timing issues. Importantly, they've provided some FY19 guidance of profit at least $6 million, and that's without any acquisitions coming through. So that has the stock on our numbers trading on a P of around 8 times, and management has told the market that there are a number of additional dental practices that they are looking to acquire in the short term. So I think that's underpriced or cheap at current levels, trading just below its issue price. A couple of other stocks in the emerging healthcare space which are more catalyst driven and catching investors' attention. I'll just draw you to 3 names. One is ResApp, a digital healthcare company in the respiratory space. They have technology to detect a number of different respiratory conditions. They have some key trial results. Australian trial result is due out at the end of this week, and by the end of September, a major US trial. So keep an eye on ResApp. That's a key inflection point for them. Factor Therapeutics, the wound care company, again, they have a key trial result for their venous leg ulcer. That's due out in October. It's been a long wait for that stock, but a binary event coming up. I'm confident it'll work. Hopefully the share price will react as well. And just finally, in PetiMed, the share price has been dreadful over the last 12 months or so. It's been delays in the publication of some of their key data. That first publication was released last week, and that saw the share price respond positively. We are expecting another publication of data before the end of this calendar year. So hopefully that share price maintains a little bit more momentum than it has over the last 12 months.